Hey guys, welcome back to another video. Today we'll be doing an analysis on Walmart. Starting off by looking at their PE ratio, it's currently at a 49.95, which is not too good because the goal is to look for companies with a PE of about 20 or less. This is something important to look at because it shows you how risky the investment will be. They have a dividend yield of 1.54%, which comes out to 55 cents per share that you own. It's always nice to see that companies give back to their investors when given the opportunity. Moving into the income statement now, let's look at the revenue. So as of the most recent year, they're bringing in 559 billion, which is up about 74 billion from 5 years ago. This is a solid increase of about 15%. So this is Walmart that we're talking about, so I wouldn't expect anything else when it comes to the revenue growth. Now looking at the net income, it's looking a little shaky. There isn't much consistency and growth going on, which is very surprising to me. The only good year they had was in 2020. This is definitely something I would hope to see be improved on in the future. The last thing to look at on the income statement is the shares outstanding. This is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it's been going down little by little over the past couple of years. This is good to see as it's currently standing at 2.83 billion from the 3.1 billion 5 years ago. Moving into their balance sheet now, let's look at their current assets. So they're looking great as they've grown to 90 billion, which is an increase of 56% from 5 years ago. They've shown consistent growth for the first 4 years here, then the most recent year they made a big jump. I don't think they'd be able to top the most recent year, but if they do, that's good for them. Looking at their current liabilities, they currently stand at 92 billion, which is an increase of 38% from over the past 5 years. The most surprising thing to me is that they have more current liabilities than current assets, which is a huge red flag to me. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it's not looking very good. It's nice to see the big jump in the most recent year, but that's not going to mean anything to me if they can't do that for another 2 to 3 years. In conclusion, Walmart has some very disappointing financials. I was expecting a lot better than what I saw. Some of the things I would like to see them improve on is more consistency in their net income, and they need to have more current assets and current liabilities. And I'd also like to see the cash flow growth before I consider buying this company. When it comes to buying this stock, I would probably wait at least 2 years and see how they're doing then. I don't think I'm willing to spend more than $100 a share for this. Two things I want to mention before I end the video is that my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.